clear the blast radius, unspool the heavy detonation wire, and get your entire crew behind the reinforced concrete blast shield immediately, because the financial equivalent of a megaton yield weapon is actively counting down to 0. Welcome to the Demolition Site Specialists. The explosive schematic we are reviewing today is designated Huge, XRP BOOOOM. This is the date XRP, don't miss it. And if you are currently standing directly on top of the charge, tapping your foot and complaining that the spot price is only sitting at $1.40, you have absolutely zero understanding of how controlled demolitions actually work. The retail spectators are completely frustrated by the deafening silence. They look at the stagnant red candlestick charts, assume the detonator has malfunctioned, and are carelessly walking right back into the blast zone to pick up their unspent capital. But as a master demolition engineer, I can tell you that the most terrifying moment is never the explosion itself. It is the absolute suffocating silence right before the shockwave obliterates the foundation. The market makers are deliberately engineering this agonizing pause. They are utilizing the perpetual futures markets to apply massive atmospheric pressure to the spot price, tightly packing the cryptographic explosives into the smallest, most highly pressurized container possible. They want the over-leveraged day traders to feel the anxiety, lose their nerve, and abandon their positions. The moment a terrified retail investor drops their digital assets, the institutional cartels silently sweep in and pack that discarded liquidity directly into the primary payload. You have survived the grueling regulatory trench warfare. You have held your assets through the most brutal cryptographic winters. And now, mere seconds before the institutional detonator is officially triggered, you are contemplating walking away. Do not let the manufactured silence deceive you. The date is rapidly approaching, and the underlying pressure metrics are completely off the charts. We are tracking a historical anomaly in the on-chain data where the physical supply is constricting at a geometric rate, while the fundamental utility is going completely parabolic. The smart money is not waiting for the explosion to buy. They are buying the silence. They are accumulating the physical float with ruthless precision, fully aware that when the regulatory fuse finally hits the main charge, the resulting upward volatility will be completely uncontainable. Put your protective gear on, ignore the impatient murmurs of the crowd, and keep your eyes locked on the primary target. The countdown has officially bypassed the point of no return. You are standing at ground zero of a permanent financial paradigm shift. Let us transition to the secondary schematic and examine the exact chemical composition of the institutional payload that is about to completely obliterate the legacy financial architecture. The mainstream media analysts, acting like amateur firecracker enthusiasts, are desperately trying to convince the public that institutional capital has completely abandoned the cryptocurrency sector due to shifting American political winds. That is a highly coordinated acoustic dampening field designed to keep the civilian population completely unaware of the massive ordnance being loaded into the vault. If we bypass the public monitors and audit the highly classified data streams emanating from the United States spot exchange traded funds, the true destructive potential is blindingly exposed. The financial titans commanding these heavily fortified investment vehicles, entities like Bitwise, Canary, and Franklin Templeton, have quietly accumulated an absolutely staggering stockpile of over $1.3 billion in physical XRP. How is it physically possible for over $1 billion of highly combustible liquidity to enter the containment vessel without instantly triggering a premature market explosion? The answer lies in the highly secretive, unregulated blast chambers known as over-the-counter dark pools. These massive asset managers are not walking into the brightly lit public markets to execute their multi-billion-dollar acquisition orders, because doing so would instantly trigger a massive price explosion and completely ruin their covert accumulation procedure. Instead, they are utilizing localized liquidity providers to systematically absorb the discarded tokens of every panicked retail investor who succumbs to the crushing pressure. To perfectly camouflage this massive resource extraction, those same liquidity entities aggressively short the public futures markets. By driving the open interest funding rates into deeply negative territory, they manufacture a highly convincing illusion of a completely deactivated market. Furthermore, you must synthesize this dark pool telemetry with the explosive scaling of the RLUSD stablecoin infrastructure. The RLUSD network capitalization has aggressively expanded past the $1.5 billion threshold. The legacy banking empires are hardwiring their cross-border liquidity operations directly into the Ripple framework. The mechanical burn rate is actively accelerating. Every single time a multinational corporation executes a cross-border transaction utilizing RLUSD, a fraction of the native XRP token is systematically incinerated by the network code. The institutions are secretly hoarding the combustible fuel while the network simultaneously burns the remaining oxygen in the room. When the dark pool containment vessels finally rupture from this hidden demand, the public exchanges will vaporize under the buying pressure. The explosive yield is guaranteed. We must now inspect the exact length and trajectory of the geopolitical fuse, because the sparks traveling down this line originate far beyond the domestic borders of the United States. A master blaster understands that a truly systemic demolition requires multiple synchronized ignition points across the global architecture. While the civilian sector is completely mesmerized by the minor fluctuations on their mobile trading applications, our international spotters have intercepted critical intelligence from the highest echelons of European and Asian financial empires. The exact date that everyone is desperately trying to pinpoint is intrinsically tied to the impending passage of the Digital Asset Market Clarity Act, which Ripple's own executive leadership currently projects has an 80 to 90% statistical probability of passing by late April. But while the American legislative detonator is being finalized, the international charges have already been armed. Weeks ago, we confirmed the highly classified integration of Ripple Prime into the National Securities Clearing Corporation directory under the undisputed heavyweight champion of Wall Street, the Depository Trust and Clearing Corporation. That precise tactical maneuver effectively hardwired the decentralized ledger directly into the absolute beating heart of the American traditional equity settlement machinery. But the new intelligence that confirms the massive impending boom is an unprecedented European convergence. We have empirically verified that Société Générale, the titanic French financial institution commanding nearly $2 trillion in global assets, has officially activated its MyCA-compliant euro stablecoin directly on the Ripple infrastructure. Concurrently, the Japanese banking leviathan SBI Holdings has successfully deployed a massive blockchain-based corporate bond specifically designed to reward traditional retail investors with physical XRP. When trillion-dollar sovereign banking entities voluntarily integrate a decentralized cryptographic ledger into their core operational machinery to settle corporate bonds and stablecoin transfers, it mathematically guarantees a tidal wave of future utility volume. The sudden violent jumps in trading activity you see are the market algorithms desperately attempting to price in this massive international adoption before the retail sector realizes the detonator has already been pushed. The legacy financial system is actively crumbling, collapsing under the unsustainable weight of its own inflationary debt spirals, and Ripple is seamlessly installing the cryptographic replacement on a global scale. The corporate media is deploying acoustic countermeasures, broadcasting terrifying macroeconomic narratives to keep the public completely paralyzed by fear. Do not let them trick you into walking away from the blast site. The fuse is lit. The international connections are fully secured, and the system is going critical. Prepare to execute your final evacuation and wealth preservation protocol, because accurately diagnosing the sovereign manipulation and the structural explosives behind this major setup is absolutely useless without a highly regimented strategy for securing your capital. We have empirically proven the covert dark pool accumulation by the billion-dollar exchange-traded funds, the exponential utility growth of the RLUSD stablecoin engine, the massive DTCC surgical integration, and the impending legislative detonation of the Clarity Act. So, what is the ultimate mathematical blast radius for this digital asset when the algorithmic containment field finally shatters? Highly classified macroeconomic risk assessments, continuously refined by elite quantitative specialists at Tier 1 institutions like Standard Chartered Bank, have established a mathematically grounded baseline target of $8 per token for the conclusion of this specific geopolitical cycle. To the uninitiated civilian spectator, currently psychologically traumatized by months of artificial suppression at $1.40, an $8 prognosis sounds like an impossible explosion pushed by a desperate fanatic. But to the elite engineer who understands the absolute certainty of a violently constricting physical supply curve colliding head-on with exponential institutional utility bandwidth, an $8 valuation is merely a conservative operational waypoint. However, you cannot successfully navigate this high-stakes digital wealth transition without a ruthlessly disciplined, emotionless framework. Human greed and panic are the ultimate fatal vulnerabilities when operating in a high-explosive environment. I strictly mandate the immediate implementation of an automated execution strategy known as the Thirds Protocol. When the network price violently shatters the historical all-time high resistance parameter of $3.84, you must automatically execute a sell order for exactly 33% of your holdings. This unemotional maneuver secures a complete recovery of your initial fiat capital deployment, instantly transforming the remainder of your digital portfolio into pure stress-free profit. The secondary operational tranche is programmed to ride the algorithmic shockwave toward the $8 institutional target zone, serving as your primary mechanism for total financial liberation. The final tertiary portion must be securely encrypted and locked in your deepest cold storage vault for the ultimate long-term macro play. Secure your private cryptographic keys offline immediately using hardware authentication. Thieves are prowling the perimeter while the crowd is distracted. The demolition sequence is locked. Execute your strategy flawlessly. Survive the blast and walk away an absolute champion.